When you look at it at the Federal Reserve level, and Chairman Jerome Powell, again, in the most recent meeting they had, he pretty much declared that, yeah, they are seeing an opening coming to lower Fed funds rate. But he goes on to suggest that we're holding off because of an expectation that these pretty good inflation numbers are not going to persist, that they're anticipating that they're going to go up. And I just find that, I think I commented last week on the program, I find that a little odd. And I think that's why he's under fire from some corners. Is the Fed's job really to anticipate future changes in some of these economic data points? Well, to some degree, I would say that's true, but it looks like they're overly biased toward, let's ignore the current good news because we're fearful that good news is going to turn into bad. So we're just going to pause and do nothing and see if our prediction comes true. And of course, that's where the Fed sometimes gets criticized for being too late, because they're holding off, expecting these numbers to suddenly reverse and get bad. But in the meantime, there's a growing sentiment, a growing argument that not doing anything when the economy is doing what appears to be very well, not doing anything in terms of lowering rates, is going to be damaging to the economy. And the Fed needs to catch up and get with the program and consider current data. Pretty strong economy, labor market's looking pretty good, inflation's looking pretty under control. Therefore, where's the rate cut? And I don't know. All we can do now is look to September, and maybe they'll come around. Again, that could change if somehow the August numbers suddenly do reverse and get a lot worse. I don't see that. So we're in a waiting game.